Hey everyone, in this video I've got an interesting comparison again between DraftKings, the mobile gaming company, and Chewy, the pet stock. So I'm going to compare these two growth stocks and answer which one is the best stock to buy by the end of this video, starting with comparing revenue growth. So let's begin. DraftKings, of course, is an explosive growth company, revenue growing to 855 million in the most recent quarter. This was up from less than 250 million in the July of 2020 quarter. The company, remember, needs to get approval to operate in each new state it wants to enter. For now, it's in less than 20 states for sportsbook, online sportsbook, and it's in less than 10 states in iGaming, so things like blackjack. As it gets approval into more states, its revenue explodes even higher. You might say, why am I optimistic it's going to get approval to operate into more states? Simply because it has a kind of win-win relationship. States get more tax revenue by allowing DraftKings to enter into the state without, the ugliness of a new casino being built and physically show that, you're allowing more gambling in your state. With DraftKings, it's, not that visible, right? You can partner with a gaming company to generate more tax revenue for your state. Meanwhile, you don't get the physical casinos, brick and mortar, that tend to not be so popular with the citizens of the state. So for that reason, it's a little bit more likely that they get approved to operate versus if they were a brick and mortar casino. Chewy, meanwhile, has also been growing nicely. Revenue up to 2.7 billion in the most recent quarter, up from a little more than 1.6 billion in the July quarter of 2020. Overall, if you compared the long-term potential for these companies, Chewy has better potential. The mobile gaming market at maturity is expected to be around $30 billion, the total addressable market at maturity in the US. So DraftKings, if you estimates suggest 33% is the market share it can get at most. So 10 billion is the most revenue it could have annually. Versus the pet market in the US is above 100 billion. So that's a market size greater than 3x for Chewy, and Chewy is one of the biggest players in the market already, and it only operates online. So the potential long term, better for Chewy in terms of revenue. The next thing I wanted to look at is their net income, the bottom line. And looking at this metric, DraftKings is losing a lot of money. They lost 242 million in the most recent quarter compared to Chewy, which was profitable, right? 6 million on the bottom line in profits. DraftKings, this loss on the bottom line is expected to go on for several more quarters, right? I mentioned they need to get approval for each new state. In addition to that, every time they get approved in a new state, they need to launch an advertising campaign, a marketing campaign to inform the people in the state that they're now legal, right? They now offer their services. That's been expensive, and that's going to continue because, as I mentioned, they're in less than 20 states, so there's a lot of room to grow for sportsbook, and they're in less than 10 states for iGaming, so there's lots of room to grow for that. They're going to be in growth mode. They're going to be losing money on the bottom line. This is something investors need to expect, while Chewy already profitable. I also wanted to look at cash flow from operations over the trailing 12 months because sometimes those losses on the bottom line are mostly stock-based compensation, and the company is cash flow positive. That's not the case for DraftKings. Most of that expense is on sales and marketing. So that's a big, big line item for DraftKings, not expected to decrease anytime soon. Chewy, meanwhile, look at that nice improvement in cash flow from operations to sales from negative roughly 1% up to positive 3.46%. Company's done a really good job improving its margins, improving gross profit margin, getting better at the business, adding logistics centers, moving fulfillment centers closer to customers, automating facilities, really getting better at what it does. And finally, I wanted to compare these two on valuation, and DraftKings is more expensive than Chewy. You might say, why is it more expensive? Even though DraftKings right now is not profitable on the bottom line and it's not generating cash flow from operations, at maturity, right, if it reaches that $10 billion revenue figure annually, it has the potential to be more profitable than Chewy. Because if you think about it, online gaming, that's a really lucrative business to be in, right? You know the saying, the house always wins, right? And if you're thinking about online gaming, the house always wins even more because now DraftKings doesn't have to pay for dealers, porters, cashiers, brick and mortar facilities, all of that goes into operating a physical casino. DraftKings doesn't have those expenses. So it can be even more profitable than a physical casino. And I think we're all aware of how profitable casinos are. Chewy, meanwhile, it's not a very high margin business. It's selling physical things online and shipping them to customers, not very high margin. And we can see that by looking at Amazon's e-commerce segment. Amazon's e-commerce segment is mostly not profitable. Mostly not profitable. So for that reason, even though Chewy has done an excellent job and it's improving, there's only so much Chewy can do in terms of profitability because it's not in a very lucrative, profitable business. It's in a low margin business. So that's why investors are willing to pay a little bit more for DraftKings right now, because the potential of maybe some point in the future they can get really big returns. However, for me, if I was choosing between these two stocks right now, I would buy Chewy over DraftKings. I would say Chewy is the best stock to buy right now. All right, that's all I've got for this video. Thank you so much for watching. If you like this content, please subscribe. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.